If you see the memorandum explaining 2024, first change was change that 12 months, 24 months, 36 months to 12 and 24. Long term, there is no change of shares. Earlier also it was 12 months, now also it's 12 months only. Only other assets, property was anyway 2 years. Other things which were 3 years has been now made 12 months or 24 months as the case may be. So units of listed business trust earlier used to be 36 months, now it is 12 months. Bond, debenture, gold, etc. used to be 36 months, now it is 24 months. It's two changes, guys. 111A used to be 15%. What is 111A? Short-term capital gain on equity shares, units of equity-oriented mutual fund or business trust used to be 15%, which Arun Jaitley introduced in 2018. That has been increased to 20%. Change number 1, Finance Act 24. Other short-term capital gains shall continue to be taxed at applicable rate. What is applicable rate? Normal tax rate. Normal tax rate. The rate of long-term capital gains under provisions of various sections of the Act is proposed to be 12.5% in respect of all category of assets. The rate was earlier 10% for STT and 20% with indexation under 112. Everything removed. Earlier it used to be 20% with indexation, 10% without indexation. And for 112A, it used to be 10% without indexation. Now, flat rate, how much? 12.5%. So you're understanding? 111A used to be 15%, now it has become 20%. 112A and 112 proviso used to be 20% with indexation, 10% without indexation. And my 112A, normal equity shares where STT is paid, that used to be 10% without indexation. Everything scrapped. Now how much is it? 12.5%, no indexation. No indexation. All the sales, etc. should happen when? Post 23rd July. 23rd July only. There's a date. So till 23rd July, whatever you sold will be normal. That's why you should know both, unfortunately. Finance Act 24 fellows, you should know both. And even later also, why not? Because they can give you problems which is before 23rd July. So 23rd July 24 is something that you need to remember. Online people, you can text on the group only when that other chat window is not working for me. You can chat on WhatsApp today only. Tomorrow onwards, we'll continue there. Are you able to understand, guys? Yeah. So, and one more thing, guys. Exemption of 1.25 lakh they have made instead of 1 lakh. Previously, it was 1 lakh. For bonds and debentures, it used to be 20% without indexation. For listed bonds and debentures, it will be reduced to 12.5%. Unlisted debentures and bonds are of nature of debt instruments, and therefore any capital gain shall be taxed at applicable rate, whether short term or long term. Short term means normal rates. Long term means 12.5%. And this one alone, 111A, STT paid equity shares, units of equity oriented mutual fund and unit of business trust is now increased to 20%. Listed debentures 12.5%. Unlisted debentures depends on short term or long term. If it is short term, normal rates, long term, what rates? 12.5%. Thus, unlisted debentures and unlisted bonds are proposed to be brought to tax at applicable rate by including them under the provisions of 50AA. I'll explain this 50AA. Then one deadly point. This third point was a deadly point. Indexation available to section 48 is removed, which is for property, gold and unlisted assets. They removed indexation for property. This created a huge hangama. This time reading the budget. After budget, lot of freak happened, just like caramel popcorn. Correct? You'll stupidly do something, later you'll realize, oh, it's a mistake. So, this also what happened. They said was for property at least you should give what? Indexation. Property you should give indexation. So, it should be normal 20% without indexation or 12.5%. Sorry, 20%. It is what? Normal used to be what? 20% with indexation or 12.5% without indexation, which are at the option only for property. And for all gold, etc., it will continue. Gold, unlisted assets, normal. It has been brought into 12.5% without indexation. Short term always will be normal rates. Any short term, normal rates. These are all the amendments. And everything is given here, don't worry. So, you see, this is the most important change for us, guys. Amendments in the rates by Finance Act 2024. So, you see, tax rate 112A, long-term capital gain, used to be what? 10%, 10% and 15%, right? So long-term capital gain used to be what? 10% and 15%. And now it has been changed to what? 12.5. And then market-like debentures, all these things are there. So let's do a chart. You'll understand in a better way. So let's see. Tax rates. Section 112A. Section 111A. This is long-term capital gain, short-term capital gain. Long-term capital gain used to be 10% in excess of 1 lakh. This is till 23rd July 2024. From 23rd July 2024, it has become 12.5% in excess of how much? 1.25 lakhs. Yeah. No, from that day, the previous day. With effect from means what? Okay, you write 22 only. Till end of day 22. From 23rd July, what will it be? 1.25 lakhs. Is the like the exemption limit. Short term capital gain used to be 15%. Now it has become 20%. This is for only 3 items. Equity shares, equity oriented units, units of business trust. Equity shares, equity oriented units, units of business trust. Guys, this is mandatory rate for them. You can't go to any other section. Mandatory to follow this section. I feel like following other section, no feelings. This is the only rate. You have to follow this. Okay. Mandatory. And then what is this? What do you say? Indexation on will you get? No scene, no indexation. That's direct rate. No indexation. No indexation. Right? So this is which Finance Act 2024. So this is where STT is paid. STT is paid. No, but there is an out of market deal and I will purchase your shares directly. Then STT will not be paid. Then it's a different thing. This STT means normally stock market transactions. Yes, that is your takeover. If I come and take over your shares through another outside the market deal, then STT will not be paid. This is what it is. Next, here, other than 112A and 111A. Other than 112A and 111A. These tax rates, Finance Act 2024. Again, we have two types here. Long-term capital gain, short-term capital gain. Long-term capital gain is given under 112. Short-term capital gain, this will always be normal tax rates. Normal tax rates. No change in Finance Act 24. Normal tax rates. This one, this one. Till 22nd July 2024 from 23rd July 2024. %20 with indexation, without indexation. What? With indexation. From 23rd July 24. If asset is immovable property, asset is others. If it is others, my dear friend, what is it? 12.5%. No indexation. Deadly. Immovable property, 20% with indexation, 12.5% no indexation. What is this? At the option of the SSC. Option of SSC. Then there used to be one more you can write down below just to complete the chart. Did you understand this structure? Yes. Just to complete the chart, there used to be one more proviso to section 112. This is LTCG on listed security other than units and ZCB. Example, listed preference shares, equity shares on which STT is not paid, listed bonds debentures, etc. LTCG. There used to be a provision. It's still there, proviso. Here, what was the scene, guys? Till 22nd July 2024 from 23rd July 2024. Till 22nd July 2024, it used to be 10% without indexation, 20% with indexation. Whichever is less. From 23rd July, very simple. I'm talking about long term, right? It is 12.5%, no indexation. %10 without indexation, 20% with indexation, which less used to be there. Now it is 12.5%, no indexation. Simple. The next point, market linked debentures. New concept. That can be a separate chart actually. Market linked debentures. Earlier it used to be in proviso to 112, now deleted. Separate section 50 AA. Finance Act 2023. 50 AA. And see, Nirmala Madam has taken this here. Unlisted debentures and unlisted bonds are proposed to be brought to tax at applicable rates by including them in 50 AA. So market linked debentures will also include unlisted bonds, unlisted debentures. Finance Act 2024. Will also include what? Unlisted bonds, unlisted debentures. Will include both. So this is the thing. And what do you mean by market linked debentures? It's a new concept, market linked debentures. It was not there before. Now they have added the concept of market linked debentures. That's a little bit of change because we'll make it out here only, no problem. Yeah, so 50 double A guys, let's write down 50 double A, same chart you're writing anyway, market linked debentures. So any investment that we do, concept of 50 double A, which is also there in the notes, I'll show you where it is. Any investment could be made in equity if you remember, or it could be made in mutual funds, or it can be made in other securities, or you can make in FD, or you can make in savings bank account. So if it is in equity listed, if it is greater than 12 months, LTCG, less than 12 months, STCG. So greater than 12 months, it will be 112A. Now we know 12.5% in excess of 1.25 lakhs from 23rd July 24. Less than 12 months, we have 111A, 20% from 23rd July 24. Correct? This is normal. Now, mutual fund or others, if it was equity, if it is debt, or it could be hybrid instrument. If it is equity, this will be called as equity oriented unit, and automatically this will come under this. No change. Now this debt and hybrid, this is what will now include market linked debentures. Now this guys, under the new law, it was less than 24 months, more than 24 months. If it is less than 24 months, it would be short-term capital gain, it would be slab rates. It would be slab rates. Now you see here, fixed deposit interest if I earn, savings bank interest if I earn, it is always slab rates. Earlier, market linked debenture for more than 12 months, sorry, 24 months, used to be under 112 proviso, which had the concept of 10% without indexation or 20% with indexation. No, no, leave that. Earlier, I'm talking about, this is 2023, this thing came, no? Market linked debenture. So what happened was, more than 24 months, this was deleted for market linked debenture. And the entire market linked debenture now, from Finance Act 23, concept of market linked debenture was brought under new section called 50AA, where everything is STCG, deadly. You hold for more than 24, less than 24, I don't care. Since here you are playing slab rate, here you are playing slab rate, to create a level playing field, since it is not listed. People, if it is listed, guys, you can take the benefit, you can take the risk, tax rate. Here, no risk also. That's the logic. Here, very less risk in debt and hybrid. When you are taking less risk, you are actually taking the benefit of 10%, not allowed. So they said, this nonsense I will not give you. So it will deem to be short-term capital gain. Even this will be taxed at slab rate. That was the concept of market linked debentures. So 50AA has two things. One, it will have market linked debentures, which we have discussed. This can be acquired any time. Then it has one more dialog called specified mutual fund. Specified mutual fund. This has to be acquired after 1/4/2023. Has to be acquired after 1/4/2023. Has to be acquired after 1/4/23. One is can be acquired anytime. One more is what? Can be acquired after 1/4/23. So if you see, there in this also there is a small change in the definition of specified mutual fund. What do you mean by specified mutual fund? It should be a market linked debenture. So the equity portion should be less or more? Equity portion should be less. Debt portion should be more. So what was the dialogue for this is earlier. Investment in equity should be less than or equal to 35%. Investment in debt more than or equal to 65 or more than 65%. These should be acquired after 1/4/23. If it is before 1/4/23, old provisions will apply. It will not come under 50AA. That's what I'm saying. It will not come under 50AA. It will come under proviso to 112. Yes, Roshan. Grandfathering rule will apply. So now come to this thing. Just see specified. Yeah. Finance Act 23 had introduced special tax regime of deemed short-term capital taxation for market-linked debentures and specified mutual funds by way of introduction of 50AA. The gains in such case were to be taxed as short-term irrespective of period of holding. That's what we discussed now. The requirement of investment of not more than 35 in equity. What is the dialogue? Investment less than or equal to 35% in equity has also impacted other funds which are not debt-oriented funds, but invest below 35% in equity shares. What was the dialogue? It said minimum, it should be less than or equal to 35% equity. There are such funds that are called exchange traded funds, gold mutual funds, gold exchange traded funds. So these funds have an underlying value. For example, gold ETF have an underlying value in gold. Gold mutual funds have an underlying value in gold. They invest in gold. They invest 30% in equity, 70% in gold. Are they 50AA? Market linked debentures was the question. Are you understanding the problem? Problem was what? Gold funds, exchange traded funds, gold exchange traded funds, where they invest in gold and other assets. They also invest in equity less than 35%. But the dialogue in 23 said anything less than 35% will be 50AA, specified mutual fund. But what about this? There is an ambiguity. Thus, there is a need to redefine specified mutual fund. For the purpose of 50AA, to provide clarity, also to clarify the reinvestment. Yes, they have given here. A mutual fund by whatever name called, which invests more than 65% of its total proceeds in debt and money market instruments. Or you invest in that fund will invest 65% in debt and money market instruments. So rather than telling like this, Finance Act 24 removed, this is what is there now. What do you mean by 50AA, which invests in debt and money market instruments more than 65%? This was removed because gold funds, exchange traded funds, etc. invested less than 35% in equity, but rest in others and not in debt. So Finance Act 24 has changed the definition where debt is how much? More than 65%. What do you mean by 50AA? More than 65%. More than 65%. Got it, guys? That is the same. This is the concept of 50AA. All the rates, everything we discussed. Online people, understanding? Online people, message on WhatsApp, please, because that my chat window is not working today. Right. So this is the important changes for our financial year, guys. Very, very important changes. This house also she changed. She said that okay, residential property, we will see all those things. This much you study, you see now. Now you will check this. See, transfer that takes place before, on or after 23rd July. Then you see short-term capital gain, page 0.71, C.71. STCG on any transfer takes place before 23rd July, then after 23rd July. So you need to be alert when it is happening. You can't forget the old rate. You have to remember both the rate, unfortunately. Okay, this is the tax rates. Just remember this. This is how it looks, the entire tax rate. And then, of course, the proviso. Then we moved on to market linked debentures and try to understand what was market linked debentures. Then 50 AA. If you see, same thing is given, and see, other than 112A and 111A, you have 112, which is same, 12.5%. Then you see this one. Relaxation for resident, individual and HF. You can write that here. It is for whom? Only for resident, individual and HF. If company is selling property, then what? No indexation. If company is selling property, no indexation. Sovereign gold bond will be other asset. It can't be 50 AA because are they investing more than 65% in debt? No. See, in case of transfer for long-term capital asset being land or building or both, which is acquired before the date of 23rd July, obviously. After the date and all, it's obviously before it should have been acquired. Where the income tax computed at 12.5 is 12.5% computed in accordance with the provisions of the Act as they stood immediately before the amendment. Such excess shall be ignored. Simple words, 12.5 without indexation, 20% with indexation. This is only for the assets acquired before 23rd July 24 and only resident, individual and HF. Here you can say only if asset acquired before 23/7/24 is sold. Only if the asset acquired before 23rd July 24 is sold. Then what if, so corollary, if asset is acquired after 23rd July 24 or if asset I will write land building, easier it will be instead of asset. Land or building. If land or building is sold by other SAC apart from individual HF, even if acquired before 23rd July 24. Then what? 12.5%, no indexation. This family heirloom properties who had their family property, they cried. So for that crying, they added one proviso for resident, individual and HF. So if a land and building is acquired on or after 23rd July 24, that is in case of these people, that is individual HF, this is individual HF, or land and building is sold by other SSE apart from individual HF. Even if it is acquired before 23rd July, then 12.5%, no indexation. This much is enough for the day, guys. Tomorrow we will continue with the taxation. We will do bonus, then you will lip, etc. That's it, over. That's all. I mean, tomorrow we can't finish it, but whenever we'll see. In the next couple of days, capital gains will be over. Then we'll start off with IFOS, income from other sources, linked with capital gain. Because if the asset is sold at less value, I'll have to link it with 56,210. So like that, we'll finish off IFOS, then assessment procedure. Online people, hope you understand.